Is it all just hype? Or is this an area creating tangible value for society, the environment, and the economy? And how do we best spot and develop these applications? So introducing and discussing with our next panel is Michael Thomas, partner at Hogan Lovells.
Hello, everybody. As was said, my name is Michael Thomas. I'm a partner in the financial services team at Hogan Lovells, and I lead the investments and markets team in London. Joining me today, I've got an excellent panel. I have Kirit, Bhatia, the head of business development at Ripple, which is the provider of crypto-based solutions for financial services, including cross-border payments and crypto liquidity services. We have Katharine Wooler, business unit director at Coincover, which is a crypto protection firm that offers financial institutions and digital asset platforms with recovery and transaction protection services against hacking and theft. And last but not least, we have Chris Bradbury, who's CEO of Oasis.App, which facilitates the deployment and management of capital through DeFi. So the purpose of today's session is to discuss what are the challenges facing traditional finance and traditional financial services, and how are they capable of being solved by digital asset technology? And as part of that discussion, we're going to tease out what also are the challenges to adopting digital asset technology for these solutions, including how best to ensure that the interests of users, whether they're consumers or businesses, are protected. So starting first with the opportunity, I'd like to ask the panel, so to provide us with some context, I mean, what do you see as the key challenges facing the financial services industry that digital asset technology has the potential to solve? Perhaps first I'll start with Kirit.
Thank you. Yeah, so, starting at the macro level, we see there's three core issues with traditional finance. One, it's slow, it's expensive, it's not very transparent, and in large parts of the world, it's not very inclusive. Okay, and that shouldn't be a surprise if you think about the core infrastructure that traditional finance runs on. It's decades old, right? And large parts of it were built probably before the internet, and so you could probably draw a pretty good analogy to what the post office looked like when the internet arrived, right? And I think that's where we are. In terms of how can the technology help solve some real world issues? We're one of the old companies in the space. We've been around for 10 years, and we've dedicated a number of years solving the cross-border payments use case. And to make that real, I was in an payment industry event a few weeks ago, where the traditional financial players were talking about reducing the cost of a cross-border payment from 12 to 15% to 7 to 8% as a win. And that is not a win, right? And so when we have a technology that you can move essentially value from A to B for cents in seconds, right? And which is what we've been doing. We've built a cross-border payment network over the years that last year transacted over 10 billion, delivered value in over 40 countries, from Australia to UK, to Europe, to LATAM, to Africa, to Middle East. And that's a real use case, right? So I've spent 11 years in Asia, been back here for 7 months, and across the world, many, many people send their hard-earned money back home to their families. When you start taking 10, 15% of a $100 transaction, that is, you've taken out a week's worth of groceries from that paycheck. And so that, to us, we are so far away from a hypothetical discussion on what blockchain and crypto can deliver to actually doing it day in, day out. From our perspective, we believe we made great strides in solving the cross-border use case. If you extrapolate a little bit further and you look at the financial services across bonds or equities or debt and other places, you see the same issue, right? Legacy infrastructure, multiple intermediaries, huge settlement types equals huge expense. And we think big focus for us is how do you take everything we've learned from cross-border payments, potentially tokenize assets on blockchains, decentralized ledgers, and deliver the same value.
Excellent. And Katharine, Chris, anything you want to add on to that?
Yeah, so we service about 250 crypto firms.
Yeah.
That's across asset managers, hedge funds, exchanges. And I think that to build on what Kirit says, it very simply is the next evolution of finance. So to Kirit's point, it's quicker, it's faster, it's more efficient. And there is likely that there is no single industry that will not benefit from that. And I know you'll talk more about blockchain generically as a technologist. So whether it's, supply chain, or whether it's, people voting, or whether it is, moving value or payments, there's so many applications. And of course, crypto is what will power that blockchain evolution. And I know we'll talk a little about tokenization on this panel. I was very privileged to see the London Stock Exchange open this morning. I think there's a few other people in the room that were with me. It was amazing to watch it. It's my favorite stuff, history and financial infrastructure. But the LSE only serves some of our largest businesses. So actually for all those companies that aren't trying to raise tens of or hundreds of millions, someone needs to serve them. So that drive to tokenization more generally, whether it's a small local business on your high street, the mum and pop store, or whether it's your kids trying to raise money for a science block, tokenization and digital assets can provide a cheaper, faster alternative. And I think we'll see a huge drive towards that.
Excellent. And Chris?
Yeah, just quickly, I think if we look at crypto and DeFi and how it can affect traditional financial services, I think it's the transparency that does kind of the most. Everything is entirely transparent on chain. And if we look at what the crypto failures, let's say last year, none of them were a failure of the technology. The crypto failures were centralized institutions that mishandled their money, mishandled their risk, and didn't have the transparency and caused, Silicon Valley Bank was a prime example, caused a bank run because they couldn't be transparent. Users couldn't actually see what money was there. USDC depegged because of the lack of transparency at Silicon Valley Bank. And that is what crypto and DeFi ultimately gives us. Not a single DeFi protocol, at least like a mid or top tier one, ever suffered any sort of bank run, primarily due to the transparency and the efficiency of its technology.
Thank you. Clearly, there's a huge scale of opportunity here. There's lots of businesses already exploiting this opportunity, whether it's to increase transparency, solve cross-border issues, increase efficiency in processes. But clearly, we're not living in a world where we can implement that at will at the moment. So, there are problems and impediments to the wide-scale rollout of this technology to replace traditional financial services models. Katharine, perhaps do you have any perspective on what some of those key problems might be?
Yeah, sure. So we're a technology provider. So I think the two main problems that we see, the first one is losing your access. So is anyone in this room that has never lost a password? Please raise your hand. No, thought so. So we actually provide backup of keys for a significant proportion of the crypto industry. So we're trying to solve that. And you read about these people that have mined millions of pounds of crypto and it's on a hard drive and they've lost their password. Obviously, I imagine that's pretty stressful. There's some guy that's trying to get funding to dig up a rubbish dump because he's quite sure that's where he's buried, put his crypto in the trash and it's gone out. The other thing we do is we help people with hacking and theft. So we don't help them hack, we help prevent it. Sorry, my marketing team's going to kill me for that one. Sorry, Alana. So we are the only provider. We have Lloyd's of London insurance, so we help support lots of people making sure their crypto isn't lost or stolen. And of course, every day there are hacks and scams in the press, and I think it's a very important distinction. The technology hasn't failed. There are some individuals and some bad actors, and I know we'll talk about regulation in one of the other questions.
And Chris, I think you've got a perspective on, the suitability of DeFi really, and how, the world isn't necessarily, from a regulatory perspective, on all fours with how DeFi operates.
Yeah, I mean, I think a big thing kind of blocking the use of it at the moment, or the problem we're using it, is around education and awareness. So we talked about the hacks, the scams, the frauds, mistakes of losing like passwords and seed phrases and so on. A lot of it is around education and so on, and humans will make mistakes. And this is a new technology, and I think we all have to be aware of that. And it's, with the internet how it is today, almost with ChatGPT, able to create your website that looks completely legitimate. Users are going to make mistakes. They're going to, like, greed is going to take over, and they're going to fall for scams and so on. And it's something we can't get around unless we really push hard on the awareness and education, and educating on the kind of do's and don'ts. But even today, with bank accounts, people are still sending money to fraudsters that call them on the phone and pretending to be Amazon or your bank or anything like that. This isn't something that's like native to crypto that we need to solve. This is like kind of digital payments in general. And crypto has the ability to try and help with that, I think. But yeah, as of everything, it's education, I think, which is the prime thing. And regulation can help with that, because regulators have a really important role to play here, I think, of not making sure that crypto is pushed into just the kind of dark, shadowy side of the internet. If it's regulated too hard and they're pushing out education, which is crypto is bad, crypto is negative, crypto is dangerous, all that's going to do is push people into the bad actors. Because the good actors are not going to sit around and potentially break the regulatory rules. They're going to close up their businesses and move elsewhere. And all that will leave is the bad actors. And yeah, I think the next point we can touch on that more as well.
And there have been a number of high-profile sort of events, whether it's the FTX issue or failures of banks that have been invested in this area. And presumably there's a risk that, that can create some apprehension from the investors, but also perhaps an overprotectiveness or misapprehension by the regulators of where the true risks lie. Does anybody sort of agree with that proposition?
I mean, maybe I'll 100% agree. I think across the board, you need a certain level of financial and technology literacy to really kind of separate what you read in the media and the noise around it. I think in the crypto space, the fact that we're actually here, UK FinTech Week, having a discussion on crypto. Earlier this morning, you had George Osborne saying that he's a crypto enthusiast. You had the UK Prime Minister saying he wants UK to be. I've been around the crypto space for a long time. Trust me, 5 years ago, that would never have happened. So I think we've come a long, long way from where we were years ago to where crypto is today. And in many ways, there are risks to rolling out new technology, whether it's the internet, whether it's an electric car or a self-driving car, all kinds of things. And we're going to go through that journey. The interesting thing, I think, more recent thing that's come to light is actually, we've talked about the risks in the crypto industry. The recent collapses of banks across the US and Europe, it's kind of brought a new risk to the table. So, for those of you not familiar, when SVB collapsed, they were holding around $3.5 billion worth of cash that was pegged to a stablecoin. That stablecoin, USDC, was at risk at that point in time because so much of the deposits that were backing it were lost. So I think the point being is, I think at a moment in time, we're learning as the industry is maturing and growing. And there's going to be risks from both TradFi and crypto that are going to have to be managed as they intertwine and as they grow.
Yeah, and I think, to that point, it's very key to understand. You read every day that crypto has failed. We were laughing in the green room if we had £1 for every time someone told us crypto is dead. I'd certainly be sitting on the Cayman Islands on the beach, not in London. But I think, where we had that crypto winter and, Bitcoin lost 70%, the asset failed, not the technology. And we're super early. This is really early as an industry. We're still learning. The industry as it is today is, 4.5 years old? I know your business is slightly older, but the digital assets industry as you see it today is probably 4.5, 5 years old. And look, we're going to see some consolidation. There's 23,000 coins. That's mind-numbing. There is no way there is enough use case for all of those. So the vast majority are toxic waste. They're going to have to go to one side. And as you say, the good actors that want to do the right thing will be the ones, quote, left standing.
And I suppose in terms of ensuring that this technology and the use cases can achieve the broadest possible market, is it fair to say that there is some friction that's caused by the fact that different regulators in different jurisdictions are treating the issue in different ways, or that the law is not on all fours, there's not a great degree of harmonization or consistency in different parts of the world? Or is that an unfair statement to make?
Yes, I'll take a stab. So we as a company, we engage with regulators across the world pretty much every week, right? Whether it's the US, LATAM, Singapore, Dubai, UK, Europe, you name it. And broadly, I guess we have an observation. You could part regulators in one of three buckets. You could part regulators like the UK and Europe, hugely engaged, have taken time, dedicated resources to learn, to create sandboxes, to write frameworks, to continue to consult with the industry and draw that. As I said, this is a fantastic example of that London right now. You see that in Europe, you see that across Asia, places like Australia, Singapore, Japan. They're very clear, they want to participate, they want to create the right environment to attract talent and companies to grow. Then you have countries which are just a no-go. You could put China in that bucket and you can part that. And then you have outliers like the US that are super complicated and difficult to navigate. The regulator there is fixated on printing lawsuits versus printing clear regulations. So when we look across the world, you see these different things. Observation one. Observation two, the crypto industry is hugely agile and nimble, and the talent that works in the industry is highly globally mobile. So what you see is companies that truly want to build solutions and want to build and solve problems will gravitate to localities that provide that security for them to thrive and to grow, right? And we're a huge proponent of that. And we believe regulation provides the bedrock to really kind of allow the innovation to flourish and companies to grow. My final observation will be actually, it's a great opportunity for regulators and finance ministers to think about how actually it creates a massive opportunity to create the next great global company, tech company in your locality, right? Dare I say, I think we missed the opportunity in the internet stage to create a Google or an Amazon in Europe and in the UK, but here we are, with the US lagging, rest of the world moving on, and it's a tremendous opportunity.
So, Chris, do you want anything to add on that from the perspective of a decentralized autonomous organization where locating where it is part of the challenge?
Yeah, I mean, I've got probably quite a different angle on that, because looking at it from the DeFi side, DeFi is this global borderless technology, and it's probably more of a pipe dream really more than anything else, but in order to regulate DeFi that really protects the users, we need a global kind of regulation approach to this. Like, it's no good if we have 50 different countries, 50 different regulation standards, actually trying to regulate a single protocol or a single batch of protocols that all operate with absolutely no idea about borders, boundaries, who's in government, who's not in government, or even if there is a government. And unlike banks, if a company is breaking the rules, banks can close their bank accounts, they can cut off all their kind of life support in a way they can detach them entirely from all the monetary systems. DeFi is not like that. DeFi will continue to operate. It's unstoppable code in most cases. And if you've got regulators, one regulator says, hey, you need to shut down. Firstly, it's, well, who are they talking to? Because in most cases, there isn't an organization, there isn't a business, there isn't an entity, there isn't a single person that can go and shut down that piece of code. And secondly, even if you manage to achieve the idea of shutting it down, it would spin up again within 2 minutes under a different umbrella, a different anonymous identity, and so on. So I think if we really want to talk about kind of regulation on a global kind of approach here, then we need to make sure that, like, yeah, ultimately it's an ask for all regulators to kind of get together and create a global framework for this. And I think even the latest UK crypto consultation paper kind of even addressed this, that in the UK at least, they don't want to kind of run before they can walk, and they want to kind of observe and see what others are doing in the industry and around the world and on how to regulate this, because, yeah, you run this huge risk if you regulate DeFi incorrectly. Again, I said it before, but if you regulate it incorrectly, all you're going to do is create an environment that allows for scams and frauds and all of the bad actors. Everybody with good intentions will disappear if regulation's applied incorrectly. So it's it's one of the biggest risks, I think, to DeFi industry.
And Katharine, you've got huge experience in actually dealing with the regulators and the government in terms of new developments.
Yeah, so we're a global business. We have customers all over the world, and we're actively engaged in lobbying regulators and policymakers. And I think Kirit perhaps is being a bit tactful as a business that is regulated, and I can appreciate why. So I've sat facing off to regulators. You know, I'm 4.5, 5 years in crypto now. I've spoke to regulators 4.5 years ago that didn't know what Ethereum was. That's the second biggest crypto in the world, right? It's embarrassing. So I think there's such a plethora of acceptance and enthusiasm for crypto, I think, that it has been an education drive, to your point. And I think that, look, it got to a $3 trillion market before regulators went, you know, we really should regulate that. Isn't it weird? There's all these bad actors that have been sucked into that. It was a sea of pirates and thieves. We should really get onto it. So I think, interestingly, if you look at the places that are welcoming to crypto, you know, parts of Europe, Singapore, versus those that aren't, you know, the US is desperate to get their manky old regulation to deal with crypto, and the way they do that is to dole out massive fines. And I'm not sure that fining Kim Kardashian for giving financial advice is really the kind of, you know, clear, coherent regulatory framework that as an industry we're crying out for. And look, I think there's such power in the technology that without that regulation, regulators really engaging, there's a huge market, and I think you're absolutely right. If we don't clear it out and drain the swamp, there's some real issues. And certainly my experience of lobbying regulators is that they're very much at the learning stage right now, I think.
Yeah.
So we've got certainly a number of initiatives occurring in Europe, Asia, UK, VARA in Asia. We've got markets and crypto assets regulation in Europe, which is going to regulate crypto assets that are not financial instruments in a similar way to financial instruments. And in the UK, the Financial Services Bill, which is going to bring in, incorporate crypto assets into our sort of financial services type regulatory regime. Open question to the panel, really. Are these the right approaches to take? Is it providing certainty? Is that helpful? Or is there a risk that we might be, say, over-regulating or regulating in the wrong way?
I can probably talk to that. So I think, and it probably talks to your point, I think the birthplace of crypto is very anti-establishment. And I think those days are gone now, right? So a number of really early crypto businesses were super hostile to regulation. And there was a certain sense it was contrary to the ethos of the industry to be regulated. Fast forward to now, companies like Ripple are making sure there's that real point where DeFi meets traditional finance. And in order for DeFi businesses to work with traditional finance businesses, there has to be regulatory oversight. So for me personally, I think the regulators are very slow. I think they've been too little, too late, and that's where we've had all these issues as an industry, which has been to our detriment. So yeah, really pleased to see regulatory frameworks and clarity in a number of jurisdictions. VARA, for example, in the Middle East is going to move much faster than, say, what we're doing in the UK. So the quicker they move and the clearer those frameworks are, the better it is for crypto firms and for retail and institutional investors, in my opinion.
Great.
Yeah, look, we're hugely welcoming, right, of regulators providing the clear landscape. As I said, I think it's a massive opportunity to attract the talent, companies to grow in your space. And look, this is a journey, right? This is as the industry grows. As I said, we're at like $1.5 trillion in asset value. More value is going to be tokenized and transact over blockchains. Multiple blockchains. We're going to have to talk about cross-chain interoperability. How do you deal with that? And then globalization. So, I think all efforts by regulators are welcome. And I think, obviously, there's first mover, second mover, third mover advantages, and that's it to play out. But for sure, it's terrific, right? This is just a moment in time. It's great to see the enthusiasm, and we need to really push on from here on in. Like I said, we've come a long way from even being on this stage 5 years ago, and I think 5 years from now, we'll be having a conversation we can't quite envisage yet.
And Chris, I mean, some of these new regulatory initiatives in Europe and the UK don't really grapple with DeFi in any meaningful way. Do you think that's the right approach, or would you welcome, say, more regulation in this area?
I think at the moment it's maybe the right approach because I think it's, like, again, we touched on the kind of don't move too fast and get it wrong. Don't also do what the US is doing and just firing off lawsuits left, right, and center and giving absolutely no insight. I think Brian talked about it really nicely earlier around the US that they had like 30 or 40 meetings with the SEC and didn't get a single bit of feedback from them. I think at least in the UK and Europe, what it at least appears to be is they do seem to be willing to learn and engage. And yeah, I think that's again the right approach. And yeah, whether you regulate DeFi or whether you regulate the entities that allow like access to it or the centralized entities on top, like that kind of something to be seen, really.
Excellent. Well, thank you very much, everybody, for your time today and for some excellent insights. I think what I'm sensing on the panel is a high degree of optimism, both about how the technology and the use cases can help solve the problems of traditional finance, but also in terms of the opportunities that the regulatory developments are giving to provide some certainty to the industry. So thank you very much, everybody, for your contributions today. It's been great to meet you all, and thanks to the audience.
Thank you.
Thank you.